Good morning. Oh, good morning. Now that's better. We're going to be with each other for at least the next 2 days. So we've got to at least be enthusiastic from the moment we start. Wouldn't you agree? Now, we're going to go through an enormous amount of information, as I mentioned, over the next 2 days. My name's Nigel Kibel. I'll be your host, the MC, and I'll also be doing the first 2 hours each day to lead us into what we're going to be doing. My own background is that one of my roles at the Academy is to actually develop new product in terms with Property Direct. One of the things we've already rolled out are Property Express weekends, which are basically bus trips, and we're running one of those, in fact, at the end of the month here in Brisbane, and I'll talk about that in more detail tomorrow. We're also setting up a property club as well, which is a way that serious investors can be involved on a better basis and also get mentoring from those people that obviously we know what we're doing. Now, my own background, I've been involved in property most of my life, and I've been involved in the, you might say, the property investment industry now for quite some time as well. I used to own my own real estate agency in Melbourne some years ago. I moved into the property investment industry. I used to run property investment courses. Then, after that, in the early part of the century, it always feels great when you say in the early part of the century, I started buying properties for people, not only in Australia, but New Zealand, and then I started buying properties in the United States. And in fact, I ran a real estate group in San Antonio, Texas in 2006. In fact, I just got back from Texas a few weeks ago, looking at property over there again. So the reason I say this to you is because people who work in this company and speak, we know what we're talking about. We live and breathe property, and we do things that perhaps are a little bit outside the square. So hopefully that means that you're going to learn an enormous amount over the next few days. Okay, first question. Why are you here? To learn? What else?
Curious.
Curious. Okay. Why are you curious?
About all the information that you have to offer.
Okay, not a problem. Why else? Why are you giving up a lovely day in Brisbane or a lovely weekend in Brisbane to be sitting inside with us? Money? Why money?
I don't have to work.
You don't want to work. Why don't you want to work?
Someone else.
You don't want to work for somebody else. Okay, is that bad?
I've got a great job. I just don't want to work for someone else.
You like your job but just don't want to work for somebody else. Anything else? Property portfolio? How many people here seriously want to build a property portfolio? Okay. Well, let me tell you folks, we run these courses for one reason. We want people to take action. Okay? The problem is that we know from statistically that a lot of people who come to these events don't do anything. And the reason is, do you know what the stats are for people actually attending seminars who actually implement anything? It's about 5%. Now, I don't know about you. I'd rather stay in bed. What's the point of sitting through 2 days of information if you're actually not going to implement any of it? But that's our role, to try and encourage you to do that. So what are you hoping to learn over the next 2 days?
How to buy a property without money?
Well, that's difficult. How to buy property without money. Clearly in the current cycle, it is harder to do that today than it was 6 months ago, and it'll probably be easier in another 6 months than it is right now. We deal with cycles. This is probably the toughest market I've seen for lending in 20 years that I've been involved in the industry. It is easing up and it will continue to. It's even worse in the United States than it is here, but even there the money is starting to flow through a bit more, and it will in the future, particularly with demand. What else are you hoping to learn?
Different strategies to go forward.
Different strategies to go forward. What else? Anyone else? Anything? Okay. And for those people who don't wish to speak, that's fine. You see, I'm one of those people, do you know when you go to a restaurant and they have audience participation? My wife's normally sitting there and I'm hiding under the table. But I learnt something a long time ago, that when I'm actually up on stage and I'm the one that pulls people up, it's a lot more fun. And what skills or knowledge are you hoping to walk away with tomorrow night? Sorry?
Basically, to learn how to beat the big four banks in terms of cross-collateralisation, the LVR, and looking at what are other ways where they don't have as much control.
Okay, well, I'll just make a comment on that, because there's a lot to be said that we go through and we talk about what you can do in an ideal situation, what you should and shouldn't be doing. So, you know, ideally we're saying you shouldn't have all your properties with one bank. But then we ring people up and they say, I'm not buying a property because I have to buy the second property I'm buying through the bank. You do what you have to do. Okay, so you do whatever you have to do to make it work, because whatever you can do today will be different 6 months from now. And we live in an age today where you can actually refinance your properties really continually. You can refinance your property in another 6 or 12 months. So you do what you have to do at the moment to secure something. So the main objectives: to challenge your current underlying belief systems about money, leverage and ownership. To understand why finance is the reason that you invest into property, and property itself is really a wealth creation vehicle. Now, having said that, it is also important, the property is certainly important as well. How many people have heard these comments where people say, buy with your head, not your heart? Everyone heard that saying? To a degree, it's only partially true, because what tends to happen is investors go and buy the first piece of rubbish they come across because it's cheap, and then they wonder why they get the Hells Angels moving into the property. So what I always tend to do when I'm looking at property, the first thing I say to myself is, if I was a tenant, why would I rent this particular property myself? Because your tenants are gold. Now the other thing too, if you're dealing with real estate agents, I guarantee you right now you could be looking at a toilet block and they'll be saying, no problem, we've got tenants queuing up for this. But I've been in this business for a long time, and the one thing that I can absolutely guarantee you is that sometime in the next 10 years, the cycle will change again and it will become a tenants market. It will be harder to let properties out than it is today. So the secret is, when you're looking at investment properties, make sure that you buy something today as if it was a tough market. If you buy a property in the right location, you're really never going to go wrong regardless. Because hopefully if you're going to buy a property, how long are you going to keep it for? 10, 20 years minimum? So if you're going to own it during that time, I can guarantee you that interest rates will go up, vacancy rates will change during that period. So you've got to look at things in the long term. To learn how sophisticated investors utilise structure and leverage to create financial freedom. And we'll be hearing from Warren Black from 21st Century Accounting, who'll be going into a lot of detail on structures. To understand how to structure and build a multi-million-dollar property investment portfolio. You see, guys, the reason why we run these courses is we want to actually create stars. We want to be able to take people in this room, and it's not one thing to buy a property. That's not the purpose of this at all. The purpose is to teach you how you can have a totally separate income stream to anything else that you're doing to create financial freedom. And we'll be going into a whole lot of reasons why you need to do that and the purpose of it all. To learn how to turn negatively geared investment properties into cash flow positive or neutral in 36 days by using covered calls. And we'll be hearing from George Focus, who will talk about that. Anyone that's heard George speak before? Well, anyone that's heard George speak knows you'll be in for a treat. He's a shy, retiring sort of fellow, as you'll find out. Great speaker. To learn how to protect your investment portfolio via trust and company structures. To learn how to master investment property selection so you're buying properties that will consistently outperform the market. I mean, one thing that always staggers me is with property, people take less time to do research on what the property they're buying than they will a video recorder. Staggers me. I cannot get over the fact that it's probably one of the most expensive things that they'll do, and yet somebody will go and buy a house and land package 40 kilometres out of a city because the agent said it would be a good investment. And what you'll learn over the next 2 days is capital growth is the only reason in Australia you should be looking at buying properties if you're wanting to build your wealth. And the difference between 4 or 10% is a massive amount of difference over that time frame in terms of where it will leave you. So buying the right type of property is very important. To learn how to secure property with no money and the mindset of a sophisticated investor, it is possible to do some of these things, but it is much harder right now in the current market. To learn how to control the valuation process. Right now in the marketplace, what do you think the valuers are doing when they're looking at properties? Yeah. What happens, the banks tell the valuers to value the property as if it was a fireside sale. Now they are starting to ease this off a little, but if we can teach you how to do some of the research so you can hand that information to the valuer, do you think it might be valuable to you if you can actually make sure that valuation's as high as possible? Okay. Having said all of that, there are very good reasons at the moment to buy off the plan property. Because what we're finding is happening, and I'll talk about this a bit later, but the developers are actually having to keep their costs down to get funding. Okay? So for them to get the funding they need a lot more pre-sales, and the prices have to be realistic, otherwise they're not getting the amount they want. So they're being very, very conservative. In some cases, they're marketing properties at a little over cost. So I've never actually seen opportunities like we're seeing at the moment, and especially when the established markets are moving so strongly. And being in Brisbane, by the way, you're in a great market here because we believe that Brisbane is currently like this. Seeing the upward hills rise? But we believe that property right across the country will be very strong over the next 2 to 3 years for a lot of different reasons. To learn how to consistently earn monthly income from your portfolio, because it'd be great buying a whole lot of blocks of land, as one client I had recently, but what doesn't land do? Doesn't give you any income, so it makes it pretty difficult, doesn't it, to actually earn money from it, or to hold it all. To learn strategies which will enable you to buy property year after year. Again, do you know that most people only ever buy one property? So the vast majority of investors are one property investors, that's it. That's not going to get you wealthy. It'll help, certainly, but it's not going to get you there fully. Okay, now I'm going to talk for a few minutes about the investors' pyramid that we have. Now, at the bottom of the investors' pyramid, we have knowledge. Why is that?
It's foundational.
Yeah, what else?
Knowledge is power,
Yep.
and therefore you need to understand what the process is.
Correct. How can you buy anything if you don't understand it? How can you do it? You know, the other thing is that knowledge is very important, and so is the research that you need to carry out. One of the things I did when I was in the States was that I looked at an apartment complex that I saw 4 apartments for $50,000 that was down as $500 per apartment per month, right? $2,000. When I got to the property, the whole thing was boarded up. Now, these are the sort of things that happen. People buy property sight unseen. They don't do their research. They don't check the pricing. How many people here might be interested in maybe trading property or renovating? Okay. Well, guys, guess what? If you don't know your market back to front and you pay too much money for it, do you think you'll make any money out of your renovation? The profit is in the buying, so knowledge is everything. If you don't have the knowledge there, you shouldn't be spending money unless you understand what you're doing. Is that a fair comment? Yeah, people do it every day in this business. They buy properties and then claim they were misled, they did it. If you lose money by investing, whose fault is it? Again? Your own. If you spend your own money and you're not sure about it, it's your own fault if you make a mistake. Okay, now we get to the next stage, the investment plan. Now, I'm going to spend a bit of time on this because there's something before the investment plan, and that is a life plan. How many people in the room here have a life plan? Okay, not a lot of people at all. Let me ask you something. How many people here are self-employed? It's okay, folks, you can admit it. Okay, what happens to you if you don't have a business plan? You go broke, what else? The very least you're going to do is not go anywhere. Would that be a fair enough comment? Okay, so why is it? What's the most important business that we're all involved in? Our lives. So why don't we have a plan? Folks, I'll make the second guarantee to you today. If you don't have a life plan, you will fail with this. You will fail with it. How many people already say to yourself, God, can we believe it? We're already at the end of January. What happened to last year? Why aren't I any further ahead than I am now? Very simply, guys, because you don't plan your lives. If you don't sit down and methodically plan what you're doing with your life and decide where you want to go with it, how on earth do you expect it to happen? Well, I'm nearing retirement. I better buy something. I better do something. That's what most people do. The reality is that you have to look very carefully at what you're doing with your life and you have to start planning it out. Now, to some people in the room here, they may think, what's that got to do with property? Folks, it's got everything to do with property. What is your motivation? What are you really trying to achieve with your life? Why are you here? Everybody's in the room here for a reason, because they want to learn, because in some way you believe that you want to improve your life from where it is at the moment. Is that fair to say? Okay. But what we're here to do is we're here to help you to do that. But the first step is you've got to realise why you want to do it. You've got to realise what your real motivation is and what your real purpose of life is. Because they're the things that are really important in life. Everything else is stuff. I mean, we can teach you how to buy property. We can teach you how to become wealthy. But only you can teach it what's up there. Because, you know, I could do a song and dance here. I'm sure nearly everyone would leave the room. But it wouldn't matter what I said to you. If you don't believe you can do this, or you really don't want to, you won't. And it doesn't matter how many motivational speakers you listen to and how many people pledging information, if you truly don't want it badly enough yourself, you won't achieve it. And I don't care who they are, you look at any successful person, whether a movie star or a music star, how many people say those people just got lucky? You hear it all the time. Lady Gaga, she must have just gotten a break. These people are successful because there are heaps of talented people. I mean, how many people ever watch American or Australian Idol? Thousands of people turn up here that can sing. Why is it that so few people actually make it as stars? Because those people who make it as stars are determined. They do everything. They're fanatical about their own success, and they plan everything meticulously in their lives. If you don't believe me, look them up. Read what makes them successful. Most other people give up because it's too hard. Most people give up and never invest because they consider it to be too hard, because life takes over. So exactly what do you need to do a life plan? Well, most people don't start because they perceive they've got to put down that I've got to be a rocket scientist. But in reality, all you need to do is start 10, 15 minutes a day, or even a week if that's what it takes. Start writing things down. You know, look at your short-term goals. It might be that you want a new car, you want a first investment property, you want to change your profession, you want a new partner. We can help you with anything here. But in all seriousness, that's where you start. And by writing these things down, it starts to take on a life of its own. And I guarantee you that 12 months from now, if you do this every day or even once a week, it will start to guide you. Now, I've been doing this for probably 15 years, and I can assure you that the life plan that I started with my wife 15 years ago is quite different to what we do now. And what I'm looking at doing in the next 5 years is going to be quite different to what I've been doing. But that's part of the journey. But by planning these things meticulously, it actually keeps you focused on what your journey should be. So when you go home tonight, even before tomorrow, start to do this. Now, I know I harp on about this, but it really is that important. If you can't get this right or make a start with this, the chances of you succeeding long term to be a serious investor are pretty remote. Now, the next stage is finance. Clearly, why is finance important? Without money, you can't do anything. It's pretty pointless looking at a $500,000 property if they're telling you have no capacity to borrow. So one of the things that we will be doing over the weekend is giving you a financial fact finder, and we'll be asking you to fill that financial fact finder in and basically give it to us, and we will have our finance people assess where you're at, and we will come back to you and tell you where you're at, so you know. It's absolutely pointless talking to you about anything if you can't do it. Is that a fair comment? But you need to take the time to do it. And quite frankly, we're so busy with these events. You see there's over 100 people in the room. Our attitude is really simple. If you can't be bothered to fill the form out, we haven't got the time to start chasing you up. And we won't be doing anything with anybody unless we have that information. Okay? So I just make that clear right now. We only have a limited amount of time to work with people, and we want to work with people that are actually serious about their future. If that sounds harsh, I'm sorry, but time is obviously fairly limited with what we do. I mean, I think we have 3 of these events on in the next 4 weeks, on weekends. So Conrad and I in particular are running around the country doing these things quite a lot. And hopefully you get a lot out of it. Asset and tax advice. Now that's obviously important, and that is also a moving target, by the way, because structures and things like that have altered a little, even with what the banks will lend to at the moment. So you need to have a very good accounting firm where you can seek that sort of advice and keep up to date with where it's at. But clearly, if you're going to build a large-scale portfolio, it is very important that you have them in the right structures. Property due diligence, that's really where you actually do your due diligence and check it out like I did with that apartment complex. I'm being a bit facetious. I know the San Antonio market very well, and I knew that you wouldn't get much in a 4-apartment complex for $50,000, but I was curious as much as anything else, and it lived right up to expectations. But it's the same right here. It really doesn't make any difference. If there's a property, you've got to look at why the fundamentals are. If you're a tenant, why are you going to rent something? Is it close to a shopping centre? For instance, we've got a development at the moment in Chirnside, right next to the Chirnside shopping centre. Now, my attitude is, if a tenant only has to literally walk across the road and go into one of the larger shopping centres in Australia, is that going to be beneficial? Will the tenant pay maybe a little more than renting something that's a kilometre away where they have to use their car all the time? So they're the sort of things you look at. Is it close to water? Does that have a lifestyle component to it? You know that you will attract a better quality of tenant. Is it close to the city? So generally speaking, we tend to focus on properties that are not too far out, or they're close to water and they have some sort of lifestyle component to them. But we always do our due diligence on the builders, who they are, what sort of track record they've got, and what sort of quality do they do. We then look at the negotiation phase. And this is all based on you doing this yourself. So you can see there's a fairly long process involved, isn't there? You then look at the negotiation, and only then do you actually get to the point of transaction. Okay? So you can see that it's not that hard, but even with this, you have to plan methodically with what you're doing. Once you've done your life plan, you need to put a business plan into place. Realistically, how many properties can you buy? How quickly can you build a portfolio? There's no point saying you want 10 properties in 5 months if you don't have the financial capacity to do it. Or buying 5 properties off the plan without the financial capacity to settle them. Because people get into trouble all the time like that. So that's why it's so important to set that plan and be realistic about it. Okay, make sure that your questions are addressed before you leave. What's the only dumb question? Yeah, the one you don't ask. I mean, it's amazing how many people think, I'll be silly if I don't ask that question, then go make some huge mistake. We're here for you to ask us questions. If you're not sure about something, please ask. And we will be out with the fact finders. You can actually book appointments on that by ticking the boxes of the various professionals that you want advice from. The first thing that will happen though is before you'll be sent to anybody else, finance has to be assessed first. Because without that, it's a pretty pointless. You're setting up a structure if you can't actually do anything, isn't it? So we need to find that out for you first. And the financial fact finders will be given out a little later on in the afternoon for you. So who are we? We're an unbiased educator of the 21st Century Academy. Now, for those people that have been to 4-day events, they'll know that we have different speakers who are from different companies. Is that correct? We are owned by the 21st Century Academy. The reason that's happened is because there was a belief that finding property companies or property educators in the marketplace who are really honest and really know what they're doing can be a little like that. So our attitude was that if we set up our own company, really to look after our membership base, and that's really why we've set up. You'll find that, as I mentioned to you early on, anybody who works at the Academy is experienced. We're all experienced investors. We do this stuff every day of the week, so we don't just get up and talk about it. One of the great things I love about my job is that I get to travel around Australia and actually learn about the market. Now, for instance, I've got Duncan Hall coming here on Monday after we're finished, and we're both here till Wednesday because we're going out to look at development projects while we're here. And that's one of the great things. I get to travel around Australia and actually really see the markets on a regular basis. And when I'm not doing this, we're really researching the markets to look at the best opportunities out there. We have a unique property sourcing service, as I mentioned. We spend a lot more time really sourcing properties than we do doing anything else to make sure we have the right projects. It's not always easy. We provide professional mentoring services for those people that want to do this professionally. And obviously exclusive seminars and workshops, we're trying to increase those. As I mentioned, we're looking at a property club, and we're also looking at maybe putting on an advanced course for property investors as well, where we go into a lot more detail than we do at this particular event. So why are we unique? Because our competitive advantage is the level of research and due diligence that we actually carry out on properties. I mean, it's not a matter for us of saying, right, you've got something to sell, that's great. We look in an enormous amount of detail. We go through basically a 52-point criteria as to why we take a project on in the first place. And it has to have all of the factors there that will work, including who the people are. If a first-time developer comes to us and they said, gee, would you be interested in showing our product to your clients? The answer is no. If the people do not have a track record, we're not interested in dealing with them. And that may sound harsh, but whose money is it? Again? It's your money. We're not going to spend your money on a risk. So from our point of view, we look at properties that are in areas that have a proven history of capital growth, and we look at developers who we've either worked with before or who have a solid track record and they can prove it to us. Duncan Hall, as I mentioned, who's coming here on Monday, Duncan's sole job is due diligence. That's all he does. Is we bring the projects in, Duncan checks it out and does all the research to make sure it stacks up. And Duncan's based in Adelaide, so we're a national company. We have an office in Noosa. Jamie, in fact, lives on the Gold Coast, and we're from Melbourne. And as I said, Duncan's in Adelaide, so we're truly a national company. We spend so much time on planes, it's becoming ridiculous. So the fundamental question: does the property have the correct fundamentals? Is it in the right location? Is it close to shops, public transport, and all those sort of things? Will it outperform the market in the medium term? We want properties that are built well, that in 10 years will still look good, not look like their housing commission, which a lot of the high-rises tend to look like after a while. And will it keep going up in value? Will it give you that maximum capital growth of around 10% per annum? And would I personally consider investing in it? My own philosophy has always been, I will never recommend anything to anybody that I wouldn't buy myself, Now that doesn't mean I buy everything that I see, but unless I was prepared to buy it, I wouldn't recommend it to somebody else. That's just always been my view. It's probably cost me money over the years, but that's just how I prefer to do things. Does the strategy make sense for me? It's one thing to say, for instance, that I want to be a property trader or I want to renovate, but are you prepared to put the work in to learn how to do this properly? Do you know why a lot of people get involved in renovations? Because they watch something on TV. You know, like a segment on Better Homes and Garden or one of these things, and they think, oh, gee, that'll be easy to make money. And then they go completely overcapitalised, pay too much money for the property at auction, and wonder why they don't make any money out of it. So it's like any craft that you're involved with. If you want to do this sort of stuff, you've really got to be prepared to put the time in. Now, tomorrow morning, by the way, we start here at 8:30 tomorrow morning. I make that clear because I'll repeat this a few times because inevitably people will come and say, oh, I thought you were starting at 9 o'clock. 8:30 we kick off tomorrow, and I'm going to spend 2 hours basically tomorrow morning just talking about how to negotiate with real estate agents and understand real estate agent psychology. How many people would like to know that? How many people would like to know some nice dirty tricks too? I may have to be a little careful, I may have to tone it down a bit for the cameras and for you at home. But we'll talk to you about a whole lot of strategies and why agents are. Any real estate agents in the room, by the way? Just always not. Any agents in the room who don't want to admit it? I'm not actually knocking real estate agents, by the way. It's about understanding psychology of how other people think and what other people think of agents as well as to how you can actually win with the negotiation strategies. So that's what we'll be doing tomorrow morning. Does the strategy suit me? Where would I be today if I'd implemented this strategy 10 years ago? Now, how many people here in the room, and be honest, think to themselves, if only I'd started investing in a large way 10 years ago? How many people? So no one else cares? Okay. The simple reality is, though, can you change what you did when you walked in the room here half an hour ago? No. Why? It's history. It doesn't exist anymore. And you know why most people hold themselves back in life is because they beat themselves up on past mistakes. I'm no different. Everybody makes mistakes and everybody feels sorry for themselves occasionally because of something they've done, particularly when it involves losing money or what have you. And you know, I can guarantee you, I don't know of too many people that haven't made a mistake in one respect or another. But the simple reality is, the way you've got to look at those things is look at it as a lesson. Look at it as a way of moving ahead to improve your knowledge on what you're doing. I look at some of the things that I'm doing today that I wouldn't have even thought of 10 years ago. The amount of travel that I do, the amount of negotiation, the amount of fun I have with foreign property markets. I mean, I love what I do. I love teaching people like you, and the fun that I have going to not only another city but another country and buying property and negotiating and understanding. It's great fun. Enjoy yourself. The reality is, who's at fault if you've done nothing in a month? Yourself, isn't it? If you walk away from here and you do nothing, you can make a decision to change your life today if you wish to. But it is solely up to you if you're prepared to do that or not. Now, I want everybody to write this down. This is a financial survey. Be honest. How old are you now? It's okay, you don't have to admit that one. I expect you to be doing this at home as well. At what age do you expect to retire and stop working? What assets other than your own home do you hope to acquire by then? What income do you want to live on? Just spend a couple of minutes just writing those things down very quickly. Okay, does anyone want to share anything they've written down? Gentleman there just behind in front of the camera.
I'm 25. I'd like to retire at 30, and I'd like to have businesses, hotels, houses in my asset pool, and I'd like to live on 100k a week.
100k a week, okay. Very good. As long as you have a plan as to how you're actually going to achieve that. That's the point. Someone else? Come on guys, don't be shy. Otherwise they'll invite you up on stage with me. Lady down here at the front. No? Yeah.
I'm 57 and I'd like to retire at 58. I'd like 2 more properties, but I guess really important for me is the share portfolio. And I guess to live on, I'm going to be realistic here, 1,500 a week would be good.
Mm-hmm. Good, okay, fine. Someone else? Come on guys, don't be shy. Come on. Surely somebody else wants to share this. Come on. Somebody there? We can take you off camera if you're worried about that. Gentleman at the back there?
Yeah.
Sorry?
I'm 46. I want to retire when I'm 76. I want to get another 32 properties and I want to reduce my living cost to $38,000 a year.
Okay, excellent. Someone else? There was somebody in the front here?
I'm 52. And, I'd like to retire when I'm 55 and have 3 or more investment properties as well as trading shares, and I'd like to live on $10,000 a week.
Okay, good. Someone else? Anyone else like to share? Down the front here, Chris.
Hi, I'm 34. I'd like to retire by 39, and I'd like to have lots of houses, I'm not sure how many yet, an internet business and shares, and I'd like to live on $2,000 a week.
Good, okay. Anyone else? Come on, guys, we're all in a room full of friends here. Well, apart from myself, of course. Gentlemen there?
I'm 49. I'd like to retire when I'm 65. I'd like to have 15 properties, and I'd like to be able to living about $2,500 a week.
Great, thank you very much. Now, the question I raised to all of you here, how many of those people gave totally different answers to everybody else? Okay, because the reality is it's the goals that you set for yourself. So whether you want a hotel chain or what have you, it really doesn't matter. But what is important is that the goals you set are realistic. And the reason I say that is because what will happen if you don't achieve your goal? You'll give up. Most people give up because they set unrealistic goals. So the only thing I suggest is that comes back to the life plan, and it comes back to the sort of planning that you're going to do. When you set your business plan, you've got to be meticulous about the information that you put down. And if you don't, you're more likely to not succeed with it. So it's important to be realistic about it, but it's also important to set those sort of goals as well. Okay, the 21st century definition of wealth: doing what you want, when you want, with whom you want, to whom you want. We don't put that one in. Whenever you want. As much as you want. And as soon as possible. In other words, it's amazing how many people here say that they want enough money to retire on. Enough money to retire on. But let me pose a question. Are you guaranteed to live to 75 or 80? Could you drop dead at 50? Could you drop dead at 40? It happens. So my point is that you really want to live life for today and plan it accordingly. So what we suggest is that you want to do as much as you can whenever you can, and that's going to be different to every single person in the room. Because there are going to be some people that won't want to work beyond tomorrow, and there'll be other people that are happy to keep doing what they're doing as long as they've got money to change their lifestyle a little. What are your goals, and how would you design your extraordinary wealth lifestyle? What would you love to do if money was no longer a problem? Now let me ask you here right now, how many people here hate their jobs? Be honest. Put your hand up. Absolutely loathe the jobs that they have. How many people here love their jobs? Good number. How many people here would change their jobs if they could? Still a good number. Even those people that said they love their jobs would change it. Okay. How many people in the room who hate their jobs are wanting to invest so they don't have to do those jobs anymore? The first thing I have to tell you folks, you're doing this for the wrong reason. Completely. And the reason being, do you think investing in property is an instant wealth thing? It takes time. So what that means is that if you're saying to yourself that I want to start to invest because I hate my job, you're committing to being there for another 10 years. Minimum. Why would you do that? Why would you waste the next 10 years of your life doing something that you hate? So you know what you do, guys? You find a new career. The first thing you should be doing, if you dislike your job or you don't really like it, change it. Forget about what the media say. We have low unemployment in Australia, and the good news is it will continue to get lower. And the reason being is because 20 years ago, people stopped having children in their 20s. Today, a lot of people don't get married, and a lot of people don't have kids at all. And when they do, they're like me, they have kids in their mid-30s. So there's going to be a massive gap of people coming through the employment pool over the next 15 years. And what that means, if you're 70 and you want to keep working, you will be able to do it. And my God, thank God you can do that, because when we look at some of the statistics of where people are going to be at that age, they'll need to keep working. My point is that you should look at changing your career and changing your life today. With the exception, of course, is that it might be a good idea if you're thinking of investing, maybe to get pre-approval before you change your job, because you'll have to wait another 3 months. But seriously, if you hate your job, do something about it. Leave here today and figure out, when you're doing your life plan, what really turns you on. What do you really want out of life? And that's what you should be doing. Don't waste years staying in something to say, well, at least I'm earning the money. It's a pretty ordinary way to live life, don't you think? Is that what you're going to have on your tombstone if you drop dead in 5 years from stress? I left the house to my wife. I'm dead, but they're happy. Think about it. What would be your true purpose and passion for life? What sort of things do you guys really want to do? If you didn't have to worry about money today, come on, what would you do? Travel, a common one. What else? Yeah.
Help others.
Help others. Great, very commendable. What else?
Go fishing more.
Go fishing more. Okay, it's a good one. What else?
Actually keep working.
You want to keep working? That's fine. Whatever does it for you, it really doesn't matter. Whatever you enjoy. I mean, I do this for work, but I enjoy what I do. If you enjoy what you do and you have a passion for doing it, then that's what life's really all about. If you don't, find something that does it for you. And what work have you always wanted to do? Think about when you're a kid. You know, children are the most honest that you'll ever come across. My little boy's 7, and I'm sure he's going to be a geologist, because all he does is correct rocks and stones and things. And he can put, I don't know where he gets it from, because I'm absolutely hopeless. You know, you get the Lego blocks. If I tried to build anything, I don't know what it would look like. He puts together cars and things like that from the instructions, and he's 7. So, but when you ask a child, what do you want to do in life? My little boy's already saying, I want to be a geologist. I want to study stones and rocks. Now, whether that's what he ends up doing, but the reality is, think about when you were young, before life happened. What did you really want to do with your life back then? When you started off, what sort of job did you want? You know? Think back to those days. It's never too late to change. We live in an age today where most people are going to change their professions 3 or 4 times. It's not like it used to be. You have the capability of doing that today. We live in probably the most exciting period in many respects that we've seen in the last 40 years. Keep in mind, it was only 20 years ago in the 80s they were saying if you were 40, you were redundant. Today, keep on working as long as you want. Keep on doing what you want. You can rechange. You can completely learn a new profession. Don't be afraid to do it. Fear is the only thing that holds most people back. Now, the other thing I suggest you do, think about what your lifestyle would really want to be like. Now, when you wake up first thing in the morning, instead of saying, oh, God, I've got to go to work today, or I've got to get up, spend 5 minutes staying in bed, and just for a few minutes, close your eyes and picture where you would like to be. So if you would like to be living in a luxury apartment overlooking the ocean, imagine that you're standing on the balcony overlooking those views. If you want to have a house or a really nice car, picture yourself doing that every minute. Because, you know, one thing that we know is that when you keep telling yourself these things, the universe actually gives it back to you. It starts to happen. So try and do these things, and it also puts you in a great mindset for what you want out of life as well. Don't listen to negativity. It's out there in abundance in this country. I love Australia, but if Australia has a fault at all, we live in a very negative society where people spend more time putting people down and taking a pleasure out of people falling than they do out of building people up, which is very unfortunate. But if you listen to the media and just listen to that, you know, it's very hard to stay away from that sort of talk. So design your lifestyle that you want to go to. Now, if we look at the journey of wealth attainment, it's very simple. It's where you are now. It's what knowledge you need to gain as to where you want to be. Now, to me, knowledge is everything. If you obtain a lot of knowledge in a particular area, is that valuable to other people? Of course it is. You know, you're here now because you want to learn. Because we've spent, I don't know, conservatively hundreds of thousands of dollars of our own money actually gaining this sort of knowledge in the first place, and that's just in one area. If you can do the same thing, you make yourself valuable and create an income by doing that. But the problem, I think, to a degree, is that what happens to a lot of people, most people realise that they need to change their lives, but most people think that they can come along to a function, a seminar or whatever, and I've got a magic wand on stage, and all I have to do is wave my magic wand over everybody's heads, and you're all instantaneously going to be successful. That would be great, but unfortunately it doesn't work like that. It takes effort. And it means you have to put the effort in if you want to do this sort of stuff. Now, it may well be that you don't want to do property, that you want to do something else. That's fine. If you want to do property, you've got to study the property market. You've got to understand those markets. And you've got to see, well, if I want to make money, how do I do that successfully? So let's just take a look. This is all research that's been carried out through the ATO. And according to the ATO, the definition of broke is $400 net a week. Okay? Just getting by is $600 a week. Moderately secure is $800 a week. Independent is $1,500. Financially free is around $3,000 a week. Wealthy is $5,000 a week. Okay? Now, I certainly know what I need every month just to cover my own expenses. Okay? I don't know how people live on some of the figures that come out from the ATO. We will actually send you a copy of all the slides. We want you to take notes, but you will actually receive a copy of the full slide presentation probably by next Wednesday or Thursday, by the way, in a workbook format. Okay, so the aim of your financial life is to earn a passive income of whatever per week, which will give you the freedom to experience your extraordinary lifestyle. How many years from now do you want to start living that extraordinary lifestyle? Today, 20, 30, whatever. But it's a matter of realistically looking at this and determining what you want. Now, it's looking at this financial freedom calculator. Multiply, just for sake, you don't need to take this down, but this is just an example. So if it's $2,000 a week, multiply it by 50. That equals $100,000 per year. Multiply by 2, $200,000. Subtract 25%, which is basically the tax, and that leaves you net $150,000 per annum. Multiply that by 20. That equals $3 million. In other words, to generate that income, you need $3 million cleared of savings. So 100 by 5% would be $150,000 a year gross. Divide that by the number of years you wish to retire in. Now, folks, what that means is that if you're going to retire in 10 years, you need to save $300,000 a year. How many people here can save $300,000 a year? If you can save $300,000 a year, you can become my personal mentoring student for free. But realistically, most people can't do that, can they? Okay? Or putting it into context, I think per week it works out at $6,000 a week. Now, even if you're talking 20 years, you still need to save $150,000. So do you think the average person can actually save the money to retire on? Is it possible? It's possible, but very difficult. So working hard and saving money alone is not the answer. And what are we told? When we start off in life, what are we told by our parents? Work hard, get a second job. Keep working harder, work overtime. You know, the reality is that most people who have followed that philosophy have ended up broke and worn out at the same time. Because do we actually financially educate anybody through the education system in this country? Not at all. And that's part of the problem. Where do people understand this stuff? I mean, guys, you know, the thing you're going to find by tomorrow night is that everything we're talking about here is really common sense. We're not waving these magical, you know, funny things that are impossible for you to actually go out and do. Everything that we talk about at this 2-day event, anybody in this room can go and do it. It's not that hard, okay? We're not trying to teach you difficult strategies and things like that. There are those available, but you don't have to do those sort of things to become wealthy. So many people believe if they work hard and save, they will eventually become financially independent and free. It's the single worst underlying belief system, and it's responsible for over 95% of people retiring virtually broke. Think about it. I mean, it's a pretty frightening statistic, but the thing that amazes me, what do the media keep saying? The media keeps saying that people are better financially educated today than they were 10 years ago. Rubbish! Because if it was true, Why haven't the basic statistics changed? Why is it still suggesting that most people will simply not have enough money to maintain their lifestyle in retirement? Why hasn't that altered if people are better educated? I mean, with property, I've never been involved in an industry where so many people think they understand it, but very few people actually understand the fundamentals. I come across people who call themselves property experts because they bought a property in a rising market. Any idiot can make money in a rising market. Anybody. But it's another thing to understand the fundamentals and make money at any time in a marketplace. So do you currently have a wealth strategy or retirement plan? That comes back to the life plan we were talking about before. Now, one of the things that I do is I often do private mentoring to wealthier people who are looking at retiring, or people who are successful in industry. And it always amazes me that when you go into a room and you're dealing with a doctor or a CEO, whatever, they're normally very sceptical when you sit down with them, because they normally say, well, you know, I'm okay, I'm earning $300,000 a year. Really? Okay. My question to them and my question to you, and it's always the first question I ask, is if you had to stop working this Friday coming, how long would you be able to live? They laugh, they stutter, they then turn white. Because most people suddenly realise that they actually have no saving strategy. I don't care whether you earn 50,000 or 300. If you don't save that money and invest it, you'll blow it. How many people here have kids? Okay. Well, what happens when you've got two people working and you decide that you're going to start a family? What's the first thing you worry about? How am I going to maintain our lifestyle with only one income? Do you manage? You do, don't you? Isn't it amazing how you have one income and you don't seem to change your life that much? But likewise, if you're earning $300,000 a year, do you think you're probably going to be spending a bit more money than you would? You buy a dearer car, you'll do all these things. So the thing is, you have to look at what your lifestyle is and bring it back accordingly. And that's why the planning is so important. If you don't save money, you're not going to do it. As I said, forever, next 10 years or until Friday. It's a pretty frightening statistic. What concerns me, there are a lot of people who are working and are relying each week on their paycheck to pay their basic bills. Do you really want to go through life like that? But let's face it, folks, at the end of the day, really, we want money because it gives us financial independence. But is anybody struggling here in this room to get a meal tonight? Right? Most people are going to be able to go home and eat, aren't they? I mean, one thing that Jamie says quite often, if you're miserable, it's really going to make any difference if you suddenly have money and you have wealth. You'll be miserable and rich. My philosophy is, if I'm feeling depressed, I'd rather be rich than poor. You still have more fun. But the reality is that's what comes back to the planning. That's what I come back to when I'm talking about the life plan again, and why it's important that you look at what turns you on and what you really want to do in life. Because if you only set out to do this stuff for money, it won't make you happy in itself. You've got to do things that make you happy, and if you do the right thing, the money will come. Okay? Okay, assessing your true financial position. Based on your current personal income and expenses, how much do you save? You see, it's only what the value of your property is, and I mean the equity, and what you actually save that determines your wealth. That's it, nothing more than that. Based on your current business and investment income and expenses, what's left over? And based on your current assets and liabilities, what's your current net worth? See, does anybody know what the difference between rich people and poor people actually is? I know somebody's going to call out money, but what else? Well, they know where they're at, but most wealthy people actually invest the money and they buy the goodies from the interest that they earn from those investments. They make their money work for them. What do most other people do? Well, look at what's happened with the first home buyers. What's the first thing first home buyers do? They've taken the grant, bought a house, gone to Harvey Norman. You know, I'm not picking on Harvey Norman for any particular reason, and taking those 40 months interest-free terms to furnish their properties. You know, I mean, certainly when I got married and we started off, I mean, we live in a great area and we got very lucky because of what I do. But, I mean, we renovated the kitchen. We added a 10-square family room on. That was the first time we had a dishwasher or, you know, some of the luxury things that we put in. And we really went to town on what we put in. But certainly when we were first married, we made do. We didn't rush out and buy all the goodies to put in. We invested our money to make it work for us. Most people don't do that. They want all the goodies immediately and they're in an enormous amount of debt from day one. And guys, one of the reasons why I personally don't like house and land packages, at the moment in particular, is that I have a view that what's going to happen is we're getting rising interest rates. All the first home buyer areas in outer zones are going to drop dramatically. The reason I say that is because there's a lot of land in areas like Ipswich, isn't there? right? How many of those people have overpaid for properties because of the demand, because of the first home buyers growth? Back in 1991, which is when a similar thing happened before, the default rate on loans were as high as 28% when interest rates were up. Now, we're suggesting that a similar thing could actually happen here at the moment. So again, you know, this is what happens. A lot of people get themselves into debt to the hilt, buy things up to the hilt in debt, and they don't have enough money to fund it. Today is about taking massive and immediate action. In other words, what we're really saying to you here is it's not enough to spend 2 days looking at the information and learning, but if you're not prepared to actually take the time and the action to do it, you know, you're not going to make it. And I know this sounds really harsh, but, you know, guys, one thing that we really need to get through to you, and that is that statistically, 80% of the people sitting in this room will end up in this position. They won't have enough money in retirement. And we just know that statistically. We go back and check and see what people are doing. And a lot of people simply don't do anything because they leave after Sunday night and life catches up with you again. The kids scream, the boss yells at you. It's really important. We want everybody in this room to be successful. That's why we do this. Unfortunately, we know statistically it won't happen. But that's why we're trying to put these figures up and show you. We haven't just pulled these out of thin air. The average Australian has a full-blown case of financial cancer. So let's look at the facts. So what are you currently earning and what's wrong with your wealth psychology and why is it so? That's based on typical average income. So you can see the median income for an individual is around 27,000 and for a couple is 69. Now, I don't know about you, I couldn't live on that. And I don't think most people live on it very comfortably. This is the 2006 census of population. Where are we? Now look at those figures, folks. Isn't that amazing? Isn't that a little? Now that's just a little like the forms you had to fill out at the beginning of the day. Okay. As we can see on this particular board here, we can see these are the ages of people and the sort of income they're currently on. And we've broken the figures down for you, and I'll go to the next slide in a minute. But you can see there that where people are earning 2,000 or more a week, it's still a fairly limited number in comparison to the overall population. And in fact, what those figures work out to be is that 40% of Australians today earn less than $400 a week. That's $20,000 a year. 40%. Think about it for a minute. Would you want to get up in the morning for that sort of money? I wouldn't. A massive 70% of adult Australians earn less than $675 a week or $35,000 a year. Now, we're led to believe when we listen to the left-wing media in this country that everybody's rich. Don't we? We hear it all the time that people are earning more money than ever before. Well, the statistics simply don't show this to be true. 2.2% only of adult Australians earn more than $100,000 a year. Now let me ask you, is $100,000 a year a lot of money today? Let me tell you, if you want to send your children to a private school, the average good private school today is $20,000 a year. Think about it. That means you need about $50,000 or $60,000 a year if you've got 2 kids before tax to send them to a private school. Okay? And does anyone really believe that the state education system is going to dramatically improve? I think the latest thing in Victoria was that parents are now being asked to supply toilet paper for their children because they're not supplying enough funding for it. I mean, isn't it ridiculous? Don't get me started on politics. I'll be here all day. 81% of adult Australians who make it to 65, they're the people that don't drop dead from stress or disappointment, will live on $400 a week or less. Think about it. Now guys, I don't take any pleasure in putting these figures up. I mean, really, I know of people that have been in this position. I really feel for them. And I think because no one's ever taught people any differently. But you know, fancy working hard all your lives, and it's not because people are lazy that they end up in this situation. Quite the contrary. A lot of people work very hard in this country. We probably work longer hours than ever before. So imagine getting to the end of your life when you feel that you should be retiring and enjoying life, and simply realising that you've got to decide whether you can actually afford to keep Foxtel, or whether you can afford to go to the movies more than once a month, or whatever. And that is a consideration that a lot of people out there really have to make on a day-to-day basis. Do you want to be in that position? Do you? No. Again? No. So what are you going to do about it? Are you going to be prepared to take the action to make the changes in your life? And it doesn't matter to us, by the way, guys, whether you do it with us or you go and do it with somebody else or you do it yourself. We design these courses so you can basically leave here on Sunday night and start investing on Monday morning if that's what you want to do. Obviously, we'd like you to do things with us, but we don't make anybody do anything here. The simple reality is what we do care about is that if you all go away and do nothing, have we done our job? Do you think we feel good about it if we spend 2 days talking, wearing our voices out if no one actually takes any notice of anything we say? So we actually care. That's why we do this. We care. We want to see people being successful. We want to see people achieving their potential. And by the way, guys, if you do a fact finder and it comes back that you can't do anything at the moment, do not give up. Because there are going to be, I'll guarantee you that in this room there'll be a large percentage of people who at the moment can't buy for one reason or another. But you know what? If that's the case, then that's part of the life plan. You have to figure out how do you change that. And it might be that you have to get another job. You have to change your profession so you're making more money. You have to do something. But the secret is to do something, not just to say, oh, well, I've now got a cop-out because I can't buy anything at the moment. Because that's all that is, a cop-out. Okay? Anybody can do anything. It is very possible that anybody, every person in this room can be successful if they're prepared to put the effort in and really be prepared to make those sort of life changes to do it. Is it easy? The stuff is, the mindset's the hard thing. It really is. To change the way you currently think that holds you back is probably one of the toughest things that you're going to have to get through. 1.3% only of adult Australians who make it to 65 earn more than $1,000 a week. Now, do you remember we said before that $5,000 a week is what's considered to be wealthy? So we're not even talking wealthy here, and we're talking just a little over 1% of the population in retirement. Now, are these figures scary? And the scary thing about it is the figures have come from the ATO. We don't just pull these things out of thin air. So the reality is that these figures are actually showing that it is very, very difficult to get ahead. So why do 98.7% of Australians retire almost bankrupt? Poor wealth psychology. We mentioned to you before that people simply don't teach people about this stuff in schools. Part of the reason, because how many teachers, with the greatest respect, have actually gone and raised money or done these things, right? It should be a compulsory subject in schools. They should at least teach people about certain things, how to buy a property, teaching a child to start saving their money at an early age. But you know where that really should start? At home. As parents and as adults, and if we're going to have children, we should be educating our own children how to do it. With my own kids, I mean, we give them pocket money and I tell them that the pocket money is subject to certain things being done. They're chores that they're given. If they don't make their bed in the morning, I take $1 off. So it's possible they could actually be in the negative every week, right? But they learn that one pretty quickly, let me tell you. But at the same time, it's very important that you teach children about the value for money. Because at 10 and 7, which are my children's ages now, they still don't quite get it, you know? Their attitude is, oh, buy another one, Daddy. Sounds easy, doesn't it? Or my daughter will always say to me, that's a really good price. I'll say, everything's a good price for you at the moment, sweetie. Too lazy or too busy to learn how to create wealth. One of my favourites. I mean, if you don't invest the time in yourself, are you going to get anywhere? So why don't you do it? Guys, I'm really not trying to harp on too much about these things, and I suppose I am a little. But it is so important. And I mean, as I said, you know, Conrad will be on soon and he'll talk to you about finance and we'll be going through a lot of detail. I'll talk to you tomorrow about how to negotiate with agents. But if you don't get all this stuff right first, you might as well not bother. You might as well just go home, enjoy yourself and do something else because you won't get it if you don't get this. Most of it's up here. They never started to invest. Started to invest too late. I don't think it's ever too late. Or fear of borrowing money and having debt. It's amazing people that get worried about having debt that will go and spend $40,000 on a car. Brand new. Right? People don't worry about that, yet they worry about buying a house or a property that doesn't actually fall in value. Does that make sense? Crazy, isn't it? Reliance on government pension safety net. Now, does anybody really believe that there will be an old age pension 20 years from now? We've got to think about this. There's so much conflicting information going around at the moment. I read reports where they say that we've got having more babies than ever before. and that in fact we're allowing immigration in more than we've ever done before. Therefore we'll be okay. When Mel Brough was the Employment Minister, they put out some statistics that were stating that by 2020 we'd only have 5% of people entering the workforce compared to now. Think about it. Like 170,000 for the entire decade when we had about that last year. And there's a number of reasons for this. Low birth rates in the past are causing it. But the other thing that's causing it as well, we seem to think that all we have to do is click our fingers and all the immigrants are going to come to Australia. What we've got to remember, in many countries, Western countries in the world, they have the same problem that we have. In Japan, does anyone believe that the Japanese economy is still a basket case? It is. But you know, why is it then that their unemployment level is only 5.3%? Because they need 600,000 foreign workers to maintain the Japanese economy. They currently have 60,000. So if the Japanese start getting serious and start offering real incentives for people to move there, do you think people might be attracted to go there rather than Australia? What happens in the United States if they start offering people US citizenships, if they're prepared to work there? Will people like to go there rather than Australia? Possibly. What happens if China goes into recession? You see, we live very much in Australia on a falsehood. We're looking at America at the moment, and people are looking at Americans and they're saying, oh, the American economy is stuffed. Do you know the only difference between the Australian economy and the American economy? China. They're buying all our goods out of the ground. What do we manufacture in this country? Nothing. Only what we're digging out of the ground. What happens if the Chinese economy goes into recession? And there are some views that they may have a credit problem by the end of the year. Probably not, but if it happens, where does that leave us? Okay, so we need to assume these things. The reality is, why do you think they brought a GST into Australia? Does anybody know why GST was implemented? Sorry? Well, to get more tax, but why do they need more tax? Because the experts, not the politicians, but the experts who plan long-term strategies, they came to the conclusion a long time ago that because we've got a reducing workforce, that the PAYE tax system simply wouldn't raise enough revenue to fund the economy. This is one of the big lessons they're going to go through in America. Unless they change the way they're taxing their economy, they're going to have major problems there. Do you know the Obama administration, according to something I read the other day, will add more debt in the next 6 months to the American economy than during the entire 8 years of the Bush administration? In 6 months, they're going to add more debt. It's $3.5 billion a day is going onto their national debt. Think about it, a day. In Australia, we are also, to a degree, going into debt as well. And the problem is that as we develop a smaller and smaller workforce, how are we going to fund basic infrastructure in this country in the next 20 years? It's going to be very difficult. And I say this for two reasons. One, because you wonder how the government is going to afford pensions and these sort of things. But secondly, it's also going to determine where development takes place. Now, in nearly every major city, there are plans being put into place to dramatically increase the population centres within, say, a 10 to 15 kilometre radius of the CBDs. Why? Because do you think if you've got dying populations in outer areas, they want to put all the hospitals and schools there? They'll put the facilities in where they already are and improve them to save money. And we're going to see this trend occurring a lot more over the next 5 to 10 years. So why I'm saying that is, again, when you're looking to invest, that's why we tend to focus more on inner city areas of the main capital cities around Australia, because we think that that's where the capital growth is going to be and you'll make the most amount of money. Does it mean that anything else is a bad investment? Not necessarily, but what we're trying to do is determine where we think the best investments will be for you over the next 10 years. Okay, I'll run through this very briefly. This again is a psychology thing. In reality, if you were the smartest thing that everybody in this room could do today would be sell your own home and get out of it. Because in reality, your own home in many ways actually holds you back. Yes, it provides you with equity to buy other things, but it actually does tie up the amount of other investments that you can purchase because they're not tax deductible and various other things. Now, don't get me wrong, if I went home to my wife today and said, we're selling our house, I don't know whether I'd get away with it. She may listen to me about it, she may not. But it's a hard thing to always give up because of the philosophy that we have in this country. So not everything is about money. I feel like slapping myself when I say that. But it isn't. So you've got to decide in yourself what's good for you. But the reality is that it doesn't provide you with an income. You can generally rent a property for better value somewhere else than what you're looking at these days for a mortgage in a better area in particular. I'm not talking about the average. Principal repayments can be used to create wealth through other investments. Your home will still cost you 2 to 3% per annum even if you don't have a mortgage on it because of rates and various other expenses. Debt on your own home will still compromise your investment. Now, if you think about it, even a first home buyer buying a property 40 kilometres out of the city will borrow $400,000. Do you think that's going to stop them from borrowing money to actually make money? And do you think those properties are going to be worth much in 5 years? If I was saying to anybody who hasn't bought a property today, I would be suggesting that you should rent and you should buy an investment property instead rather than buying a property to live in. Forget first home buyers grants. If you buy an investment property in the right location, I believe that will more than make up for any money that you don't receive from the government as a first home buyer's grant. So certainly if I was starting off today, there's no way I'd be buying a home to live in. I'd be renting something and buying investment properties. But if you already own your own home, that's a decision you've obviously got to make as to whether you want to, how far you want to get ahead. So, you know, if you can't do anything at the moment, that's another decision that you might possibly make. If you're living in a property that's really not increasing in value, then that's a hard decision some people have to look at too. Your debt is at risk because you're the only one making the loan repayment. When you buy an investment property, the banks will actually allocate around 80% of the rent into the calculation of what you can borrow. So if you're starting off, it means that you can actually borrow more money to buy better quality property for investment than you would to live in anyway. And so on and so forth. And the other thing that's really important is that if you borrow money, and a lot of people borrow money on a principal and interest basis, a typical loan will cost you $300,000, you'll end up repaying $800,000 back to the bank. Is that a good investment? Is that going to hold you back? So the very least you should be doing is looking at an interest-only facility on your own home. Do not let the bank talk you into principal and interest. There's only one reason the banks do that. Why do you think that is? They make money. They make a heap of money out of you doing principal and interest loans. And we'll talk about that during the course of the day as well. Now, superannuation. What can I say about super? But the reality is that a lot of people in Australia forget about what's just happened. Does anybody know who actually implemented the super scheme we have today? It was Neil Blewett from the socialist left of the Labor Party, and when he brought this in 1983, he openly stated at the time it was there simply to replace the old age pension. In Singapore, for instance, they put in around 15% and the employee has to do the same thing. But you can borrow against your super fund in Singapore as well. So in Australia it's 9%, and most people say, oh, that's all right, my employer puts 9% in, I'll be okay. No, you won't. Not enough. You know, $600,000, if you're lucky to have that amount of money, will only give you $600 a week in retirement. And that's if you've been working long enough to do it. The reality is, my own belief system is that property is probably the best super that you can actually buy anywhere because it's the safest and you also control it. So who do you ask for advice on how to create personal wealth? Family. Tell me, what's going to happen when you go home tomorrow night and you say to your friends and family, I went to a property seminar over the weekend. What sort of things are they going to say to you?
Be careful, the negative things.
Yeah. Why did you do that? Weren't they trying to flog something to you? And it better be bad. And why would you want to invest? The economy's risky. You see, there are these people, it doesn't really matter what happens. Think about it for a minute. Have you ever noticed that when you're talking to family and friends and you have good news, it might be you've got a new job, something great's happened to you, but it's like this dark cloud descends. They're not really interested. And I know this is a horrible thing to say, but most people would prefer you to fail. Most people do not want you doing better than they are. And these will be the people that will whinge and bleat and tell you how horrible things really are in life. Okay? My answer to that is you probably need to get new friends. Family, that's a different matter entirely. I don't tell my family overall anything that I do. I mean, my immediate family I do, my parents I have a chat to, but most of the rest of the family, forget it. In fact, at Christmas last year, they said, what are you doing now, Nigel? I said, I work for a cult. We laugh because we're funny and we laugh because it's true. But that's the reality of it. When I was younger, I'd spend a lot of time trying to convince people why they should do something. I'd be telling my family, do this, go and invest, do this. And people would start saying how arrogant I was. I know you find that hard to believe, but I think that. So I got to the point in the end where I thought to myself, I'm not going to try and convince anybody of anything. If people want my help and they want to ask my advice on something, I'll give it to them. If they don't, that's their problem. And you've got to take the same philosophy in life as well. Don't try and get enthusiastic and rush in, because you know what will actually happen? You'll get all enthusiastic after this weekend and you'll be telling people what they should do, and you'll actually get burnt because you'll actually become unenthusiastic because of it anyway. Tips from family groups and friends, similar thing. Accountants or lawyers, they're fine. The only problem I find with a lot of accountants and lawyers is they're not property specialists. And it's a bit like going to a doctor. Would you go to a GP and say, look, I need to have a heart transplant? You wouldn't, you'd go to a specialist. And what the problem I find with most accountants and lawyers is that most will tell you that they understand property. My experience is most of them don't. So you really need to make sure that they are a property specialist. Financial planners, again, make sure you're dealing with a financial planner who is qualified and actually has experience, and they're not a used car salesman. Well, they weren't used car. No, there's anything wrong with used car salesmen. Stockbrokers, when do they make money? Whenever they sell you anything. Real estate agents, God love them. What do real estate agents mainly transact in? Yeah, what type of property though? Residential housing. You see, real estate agents are like an ant colony. They exist in one area and their whole life revolves around listing the next property to sell. There's nothing wrong with that, but that doesn't make them an investment specialist. I guarantee that if you walked into an office in Ipswich and said, I want to invest in property, do you think they're going to say, well, we actually recommend that you go to Cannon Hill or you go to somewhere close to the CBD because that's where it's going to rise more in value? They're going to say, no, have I got a deal for you? Come in, have a look. We've got some great properties around Ipswich. And that's the problem. They do not understand that. In fact, most agents invest in property far less than the general population. So what does that tell you? Financial media. And I love the media. You'll read a paper where it'll have conflicting information from one page to the next. Okay? You've got to read all this information and take it in, but use some common sense when you're looking at it and don't believe everything you read. Investment books and newsletters. Get as much and read as much information as you want. The same thing with seminars, but just be aware that when you go to seminars, if there is a particular vested interest, they're trying to sell you a product or a service or a course, then naturally they're going to slant that information to that. So take what you want for it, but from you what you want from it, but also, you'll learn something from every single thing that you go through, but you just need to assess it fairly carefully. And professionals and experts. Deal with people that know what they're talking about, who clearly have the experience, who can help you. So obstacles to financial independence. Avoid or fears investing. Buy things that cost them money, particularly cars are a classic, I think. Have bad debts. I'm not saying you shouldn't have a nice car, but just appreciate the fact that it's not actually an investment. Pay full tax. Get advice from uninformed family and friends. Yeah, seriously, with some of the clients that I had over the years, if they listen to what their family and friends tell them, my answer always is, if they say, well, it's too expensive or it's too cheap or whatever, I'll say, well, bring them in. Let's have a chat with them and find out why they think that way. So keep it to yourself. Work harder. Lose opportunities and time, and they procrastinate. Now, if we look at the educated investor, they know they must invest. They buy things that make them money first. They use good debt. They minimise their tax. Get advice from experts and specialists. They work smarter. They use the opportunities and time, and importantly, they take action. And that's the difference. And that goes for everybody watching this at home as well. You need to, don't turn the television off and go and watch something else. So the definition of an investment is owning income-producing investments that generate enough passive income that allow you income really to fund your extraordinary lifestyle as soon as possible. Wealth is not the amount of money you earn, it's what you keep and invest. And that's why property is so good. It goes up in value. And at the moment, if you can buy a property that actually goes up by 10 or 15% in 2 years it takes to build it, is that a good investment for you? It's better than anything you're going to buy that's established at the moment. Wealth is a continual, never-ending stream of disposable income. Become a millionaire not for the money, but for the person you want to become. And I know I keep harping about this stuff, but it really is that important as far as I'm concerned. If you want to get to that next level, it's important you understand why. If we look at the Australian political landscape, I get onto politics again. The Australian landscape, you have cash, fixed investment, government bonds, superannuation, which you've already spoken about, commercial property. Do people like the idea of commercial? Commercial can be good. You generally speaking, you don't have any, when you're dealing with commercial property, all the outgoings are generally paid by the tenant. The one downside with commercial though is the banks value commercial property based on the return. So in other words, if you were getting $25,000 a year rent and it was capitalised at 10%, then it would be worth $250,000. The problem is, what is it worth if you lose the tenant? Well, it's got to be worth something, but I saw firsthand back in 1990, when we had the Great Recession back then, what happened to people that were buying factoriettes in outer areas when they just became worthless. People lost their life savings immediately. That doesn't happen with residential property. Because what does most residential property go to? Who owns most of the residential property? The banks, yeah. No, who else? It's owner occupied, isn't it? Right? Most people who buy property is driven by the owner occupied market. It's not actually driven by investors, is it? Okay? But when you're buying commercial property, it's only driven by investors. Also, the banks will generally only lend you about 60% on a commercial deal. And the reason being is very simple. It's because they deem that it's much higher risk than residential property. Residential, I believe, is the safest form of investment. Shares, as long as you know what you're doing. And also owning a business, which I think we seem to get more disadvantaged on in Australia than virtually anywhere else. And the other thing are collectibles. You know, buying that Mercedes-Benz that was built in '65. But to do something like that, what else do you need? Knowledge. You have to know what you're doing, don't you? So when is the best time to buy property? Yep. Any time is a good time to buy if you're going to buy and hold it for at least 10 years. Okay? Even if you buy at the top of the cycle, as long as you're not going to sell and you're going to hold on to that property, it still will perform well over a period of time for you. What we are suggesting at the moment, though, there are windows of opportunity as the markets are moving up because of shortage of properties being built. You see, what's happening in Australia today is the banks are also very tight on funding at the moment. So a developer has to have maybe 60-70% pre-sales to actually get funding to build the project. So that's creating a dramatic shortage around the country. I mean, we've got about, 1,500 people a week moving into the greater Brisbane area. There's about 1,200 people a week currently moving into Melbourne and a similar amount now moving into Sydney. So it's a pressure cooker effect. We won't be able to provide enough rents on properties or enough rental properties over the next few years, and demand is going to exceed to rise. So do you think that means it's a pretty good opportunity to buy something in a great location at the moment for investment? I don't think I've seen a better time to buy something than I've seen in the last maybe 10 years. So let's just look at some of the excuses that people still use. Not significant knowledge. Well, hopefully if you're prepared to gain the knowledge and come here, you'll gain that. Haven't got enough time. That's one of my favourites. How many times do you hear people say that? Haven't got enough time, I'm too busy. It's amazing though, they still have enough time to go to the football. They still have enough time to watch television. They still have enough time to eat. They still sleep. I mean, do you think if you're serious about this, you can make enough time to do the research? Yeah. She'll be all right, something will change. The great Australian verb, isn't it? You know, everything will be all right, she'll be all right, Jane. If you don't make it happen, nothing will change at all. It's too risky. Is investing in property risky? Only if you don't have knowledge. If you invest in a reasonable location and you do your research, I'd say property is one of the safest investments you can possibly make. Has anybody seen the value of property go to zero overnight? What about shares? Absolutely. I got involved in a thing called the Great Investment Debate about 8 years ago. And it was a lot of fun because, of course, the people doing the shares were paying for it. And I got up and I said, HIH, one tell, answered. I was very popular with them. But the reality is you can't lose all your money in property because property simply doesn't work that way. I don't want to lose my house. You won't. Generally speaking, what's the maximum you're going to use from a line of credit on a house? 20%? Have we ever seen the property market actually fall by 20% in real terms? No, it hasn't happened. Even in 1990, which was the worst market we've seen anywhere, unless you're in the upper market. Everybody tells me I'm crazy. I just put that there about me. But seriously, I say this because when you go home and you start talking, you want to be a serious investor, they'll say you're nuts. Why are you doing it? Why are you putting yourself under risk? There's always a reason why. The property market is about to collapse. Conrad and I get down on our knees every night and we say this: please let the property market collapse. Because if the property market collapses, how much money do you think you're going to make? Lots. While everybody else sells and panics, that's where you make money. That's one of the reasons why I'm looking so closely at the American market today, because there are great opportunities there at the moment. So when a market's falling or it's at the bottom, that's by far the best time to buy. And yet the media say, oh, no one touch property, no one do this. It's like the share market. Share market's collapsed, no one buys. It's crazy. That's where you make your money. No support from my partner. Get a new one. That's why we're setting up the 21st century matchmaking service. To match up the well-heeled. But seriously, if you have a partner at home and they say, you're not doing this, you're not doing that, I don't want to do it, you're wasting your time. You really will end up divorced, without a friend, without a colleague. One of the reasons we really encourage people to bring their partners to these events is because it is important that you think the same way if you're going to move ahead. If not, get rid of them. No children, don't worry about it. Please don't ring me up. I'll get some irate person ringing me up and say my partner just walked out on me because of what you said. Can't work out a plan. Well, hopefully we've taught you that you can work out a plan if you set the time aside to doing it. Don't know my goals, so how can I reach them? Once again, you need to sit down and work through those things. I give up too easily. Don't. It's a simple thing, don't. I'm looking for the easy and the quick way out. Ladies and gentlemen, if that's what you're looking for, do what most other Australians do. Get a quick pick. That's what people think. I'm going to wait for my lucky numbers to come down. Or go to the casino. There's a good reason why half the state governments at the moment are running their economies through the casinos. Does it tell you that you can win against a slot machine that's programmed not to let you win? That's what a lot of people do. It can't be done. Surely it can't be that simple to make money. Otherwise, everybody would be doing it. You know, the reality is that it is actually that easy to make money. Most people don't do it because they make excuses as to why they shouldn't. Wealth begins and ends in the mind. If you can do it, you can believe it. Right? If you believe it, you can do it, should I say. Yeah. You see, my mind's already fried. But seriously, that's what you've got to look at. If you believe you can be successful and you think to yourself, I'm going to do this, you'll do it if you truly believe it. And that's why I say it really has to start up here. That's what comes first. The other things are just stuff. We can teach you stuff. We can teach you how to invest. But we can't really make you change the way you think. Only you can do that for yourself. Okay, what we're going to do is we're going to have a group exercise. Now, I'd like to thank these volunteers for coming up the front. Now, in all seriousness, what's going to happen here is these guys have taken on the job of being group leaders. So we're going to break all of you up into groups, and these guys have got to come back and actually report back to the room what your groups were actually talking about. And what you're doing is this. First question, what has stopped you from, because of time here, because we're already running fractionally behind, because of time, we want you to stick to 2 main points for each rather than going through too many things. But what has stopped you from either investing or creating real wealth to this point in your life? And write down your action plan to get your mind right in terms of where you're going to start planning for the future. What I ask is try and finish and be back in the room here at 11. So if you can all go to it. So group 1 and 2 at the back of the room, 3, 4 and 5, and perhaps follow out your leaders. So group 1 and 2 at the back now, 3, 4 and 5, head out into the foyer, and if everyone can follow them outside. Okay, everyone. Did everyone enjoy that exercise? Oh, please don't bowl me over with enthusiasm. Okay, the group leader for group 1, up the front, please. You'll need to be on stage. Okay, if you could use that, please. And just report back, what did your group think? What were the points that your group came up with?
Okay.
Is this your name?
Jeannie.
Jeannie.
Okay, we'll go back to they didn't know how to find the money to do it. They thought, and that relates back to they didn't have knowledge of the tax issues or the lending criteria. Some had concerns about job security. A big one was the negativity from other people whenever they did sort of think about it, and that eroded confidence. And some thought they were just too lazy and too hard basket. As far as the action plan, the big one was get the knowledge, attend your seminars, read your books, set a life plan and a financial plan, get to the right professionals for the right advice, take action and then take responsibility for your actions, set a goal and then set small achievable goals and then celebrate when you achieve them, make a start, stop wasting time, get the right mindset, hang with like-minded people, and if you have to, change your peer groups. Be happy personally, look for the positive. Learn from your mistakes, but don't quit because of them. Look for opportunities. Prime time is now. Reassess your financial situation. Be brave, dream big, keep focused, and set yourself up a vision board so you can track where you're going.
Excellent. Big hand. Very good. Okay. Group 2. Group 2? It's amazing how many people go for a runner at this point. There you go.
I was quite surprised in the first question. There was a minimum 80 to 90% was knowledge. There's a lot of various variations, but resoundingly was knowledge. I'll keep it short and sweet. I didn't take notes. And the answer to it is to gain the knowledge and you get educated, and they can't be in a better place than what they are here today, over this weekend. Thank you.
Okay, thank you. All short and sweet. Okay, number 3. Thank you.
Thank you. Okay, what has stopped you? The main big ones were banks, negative friends, lack of goals and or purpose, bad spending habits, fear, lack of knowledge. There are others as well, but I didn't really take notes, but that's just from my memory. For the action plan, big one was come down to set some goals, really set some achievable goals there. Have someone to keep me accountable. I found that was quite a good one. Thank you. Keep positive and motivated, and get the right mindset and with the knowledge and so on that that can happen.
Terrific. Thank you very much. Thank you. And in fact, the point of having either a mentor or somebody to bounce off is a very important thing. And it doesn't matter who it is. If you look at the most successful people around, whether it's Jamie or any of us or other wealthy, successful people, they all have one thing in common. They have somebody else they answer to, somebody else that keeps them on the straight and narrow. And you do need somebody like that. It's a bit like when they tell you to go and play tennis as a kid. You play tennis against somebody who is better than you, so that's how you learn, isn't it? Okay? And you cannot underestimate the negativity that really exists with people out there too. I mean, I do this for a living and I do it professionally. You'd be surprised how many supposed friends, family, other people that I come in contact with who want to tell me why I'm wrong all the time because of something they've read in the paper. So if they do it to me, they'll very quickly demoralise you if this is what you're wanting to do. As I said to you before, the most important thing here is don't try and talk anybody into anything. Just do it for yourself. Okay? If people want to learn and they want to get ahead, help them by all means, but don't try and force it on people. It'll just end up damaging you at the same time. Group 4. Yep. No worries.
Probably the main thing in our group a lot was the knowledge and the lack of knowledge. So basically a lack of knowledge gives you a lack of confidence, which would then give you fear, which would hold you back. Old beliefs in society, So the belief that, like investing's only for the rich, or, like the tall poppy syndrome, like if you stand out from the crowd, like you'll get torn down, things like that. The wrong information from so-called experts, talking to an accountant or someone, like you say, that don't actually know the property market or whatever you're looking into. Circumstances in life, divorce was one of them. Things happen. Kids possibly as well could probably hold you back a bit financially. Investing is only for the wealthy. The media was a big one too. If you watch the media and believe what you see, it can put you into fear, hold you back. So an action plan, basically, is a start with this weekend, is just a start to leave here then and take action in something, no matter what it is. Set small, achievable goals so that they empower you rather than disempower you. And as they said before, you celebrate when you get your goals, when you reach your goals. Surround yourself with like-minded people, definitely, and find a higher purpose to why you're doing it. Outside of the money that will keep you driving forward once you've made the money, because it's not all about that. And probably a starting point is to work out where you are now, so that you can move forward from there.
Excellent. Thank you very much. And it is important to reward yourself along the way as well. So that means if you get a success, reward yourself. Go on a holiday, buy something that makes you feel good about yourself. Nothing wrong with that either. Group 5. Thank you.
For our first point, what has stopped us from investing? We put down that we have been socially conditioned that what we have been doing is actually the right thing. We have bad debts that we need to get rid of first. We don't have enough disposable income. We think that we need money to actually make a start. We come from bad experiences. We don't want to go through those bad experiences again. We have knowledge paralysis, or we have lack of knowledge, or we just enjoy staying within our comfort zone. For our second point, our action plan. Our action plan is to actually start somewhere, to gain the knowledge, to take small steps to build confidence, to review our past experiences, to set up our life plan, to start with risk analysis, start with low risk and move up, to review our budget, to get a professional mentor, to get a buddy who will encourage us, and to take advice from people who have actually done it in the past.
Terrific. Thank you very much. Okay, did you find that a useful exercise? Yes. It's important to reflect on what you're doing and why you're here and what you're wanting to do in the future. And I suppose for the first session, that's why we emphasise that so much. Well, that's the end of the first session for today.